am I right? This is why some people believe that you're just one giant Ponzi scheme. Let's recap how we got here. As most of you probably know by now, the FTX collapse sent shockwaves through the crypto markets the last couple weeks, the result of which could leave up to 1 million individuals receiving very little to none of their hard-earned funds back. For many, this has them questioning the legitimacy of other exchanges and crypto as a whole even. And rightfully so. With close to $10 billion in missing assets, there's only two conceivable explanations. Either the company gambled that money on risky investments and lost it, or they stole it. In this video, we're going to break down exactly what happened to FTX and look into how this actually might be a good thing for crypto once this has all blown over. Hi there everyone, my name is Ryan Cohn and welcome to my channel where we discuss passive income methods, investments, and all things personal finance. FTX, once trusted by crypto veterans, newbies, celebrities, and large investment firms alike, has officially filed for bankruptcy November 11th. Founded in 2019, the FTX digital currency exchange quickly rose to its international stature through a series of high-profile acquisitions, aggressive marketing strategies, and of course, its low trading fees. Backed by over $2 billion in venture capital and celebrity endorsements such as Steph Curry, Tom Brady, and even Shaquille O'Neal. It attracted crypto investors worldwide by the masses, which quickly made it one of the largest players in the space. Soon after Sam Bankman-Fried founded FTX in 2019, Bitcoin began its bull run cycle, and all things crypto went to the moon, FTX included. However, as we entered the bear market, some other platforms in this space began to go under, and some were even bought out by FTX, labeling it as the hero of the crypto space. But this is where things begin to get ugly. On November 2nd, CoinDesk reports that Alameda Research, a company founded by SBF, held a large number of FTX's token, FTT, on its balance sheets, screaming signs of insolvency. And just a few short days later, on November 6th, CZ, the founder of Binance, tweeted out stating that they have decided to liquidate all of their remaining FTT. And by November 7th, the price of FTT began to tank from $22 all the way down to $15. Only to be briefly saved by SBF tweeting, "Things have come full circle. FTX's first and last investors are the same. We have come to an agreement with Binance for FTX, pending due diligence, etc." However, after only 24 hours of due diligence, Binance decides to pull out of the deal, causing FTT's price to enter a free fall, crashing all the way down to $22 by November 9th. And running out of options at this point, FTX does the only logical thing. They file for bankruptcy protection on November 11th, and SBF steps down as the CEO. As CNBC reported, there's close to $10 billion in missing funds, and it's likely that FTX was more wrapped up in the Terra Luna collapse than we all previously thought, and that FTX either had a hole because of this, or Alameda Research had a hole because of this, and one was simply used to plug the other. Either that, or they simply funneled the money offshore and are trying to steal it all. So the question everyone's asking, where does the crypto market go from here? Well, it was likely that regulation was coming for crypto, and it's now looking likely that regulation is going to come much sooner than we previously thought. For the time being though, 10 plus world-renowned crypto exchanges such as Binance, Bitfinex, Coinbase, Kraken, Crypto.com have all pledged full transparency and will be releasing their proof of reserves in the coming days. And ultimately, this level of transparency is an amazing thing for crypto. I think if companies were entering into third-party audits more often and were showing their proof of reserves and liabilities on a consistent basis, it would create a space that was much more trustworthy, and it would attract more investors and enthusiasts into the space overall. And as crazy as it sounds, we've all been investing into these companies based off of good faith and community sentiment, and that leaves the door wide open for the infamous rug pull. On the other hand, crypto and DeFi are the wild west of the financial industry and are on the cutting edge of innovation. And the entire reason people enjoy investing into these assets is due to its unregulated nature. So if the US government cracks down on crypto, it really goes against the very core reason crypto was created and has gained so much popularity to date. And sure, the protections can be good when regulated by the government. If we take FDIC insurance, for example, the people that lost money during this FTX collapse would likely have that money guaranteed by the government if we did have those regulations in place. But it also makes it much more difficult for the common investor to make money. We take a look at the accredited investor status, for example. Right now, only accredited investors can purchase securities not regulated by the SEC. And in order to become an accredited investor, you either need to have an annual income of $200,000 per year or $300,000 per year if filing jointly. Either that or you have a net worth of over $1 million. So what does this mean? It means that those who are rich get access to the best investments and continue getting more and more wealthy, whereas those who are deemed middle class or poor don't have access to these investments and have a much harder time generating wealth. Meanwhile, we can still go out and buy Mega Millions lotto tickets or go to the casino and gamble our weekly paycheck away, where the odds are completely stacked against us. So it makes you ask the question, who's protecting who here? And I'm no conspiracy theorist, but it does make you wonder if the US government is going to use this as an opportunity to seize more control over what we can and cannot invest into. In my opinion, a crackdown on crypto is a crackdown on our freedom and ability to make high-risk investments, and because of that, be able to earn the best rewards. Overall, the crypto community needs to do better. And hopefully after this, we will become better. If we look at the big picture of this, the crypto market is for the people. It was created by the people for the people. It's not governed by governments, not at the moment. And it's not controlled by large corporations. It's controlled by all of us together. So by creating a more transparent ecosystem, one that has more trust, we'll be able to create something that has more long-term value and creates new technologies and more value for all of us as investors. Ultimately, this FTX collapse never should have happened. Having massive holes in their balance sheets and over-leveraging their clients' assets is an awful and terrible thing. And my heart goes out to all of those whose life savings and well-beings were affected by this. This is the largest crypto collapse that we've seen to date, and hopefully it stays that way. But in the meantime, it serves as a reminder that for crypto enthusiasts not to put all of their eggs into one basket, to make sure that you're doing the proper due diligence before investing into a project, to get your crypto off the exchanges and put into a cold wallet. And for those who are creating projects in this space, it serves as a reminder to make sure you are getting your third-party audits done and you are showing your investors your proof of reserves and liabilities. Overall, I feel very hopeful for crypto moving forward. I think it's going to take some time for us all to heal. But only by working together can we create a space that does grow from this, is healthy, and is completely self-regulated. And I know this content is a little bit different from what I typically film on this channel, but if you guys do like this content style and would like to see more, please make sure to leave a comment down below. Really appreciate your support and for watching the video all the way through. It means the world to me, and I'll see you guys next time.